The Monetary Policy Committee meeting will conclude its two-day meeting today. In few minutes, after deliberations by members of the committee. Among the key deliberations that are expected to top the list is the update of central bank's decision on the ban of forex sales to Bureau-de-change operators. Also, it is expected that the decline in inflation may also influence the committee's decision on the monetary policy direction. But some analysts have said all rates will remain unchanged as there is no significant growth in the economy. Recall that the MPC had retained the monetary policy rate at 11.5% and other key parameters at the end of its meeting in July. Ahead of the address by the CBN governor, let's discuss the performance of the economy since the last meeting and the implications of the CBN's decision. Well, joining me live to discuss this via Zoom is a macroeconomist and fixed income analyst at Chapel Hill, Denham, Mr. Michael Ogunremi. Good afternoon, Mr. Ogunremi, and it's good to see you.
Good afternoon to all.
Yes, I'd like us to start this way before we go into what we should expect. Now, what do you think will be the fundamentals? What will be in the plate? A lot for them to talk about and to tinker around with. What do you think will be at the front burner? Some say it will be the FX issue. Some say it's about balancing payments and all that you know that the CBN should do or the monetary policy should do. Take us through what you think would be on top of this discussion today.
Okay, I think that as far as the CBN is concerned, the language they've sent to the market in the previous two MPCs has been on growth. The CBN believes that once you're able to contain growth, what would come out of it will be improved production. When we have improved production, most of the other variables, will most likely fall in place. And that's because of the fact that the outturn of most macroeconomic variable trails the performance of, GDP at large. So for me, I think that would be the big picture. However, it doesn't mean that they still would not pay attention to all the other variables. Just like you said, exchange rates, inflation, foreign portfolio investments, the performance of the equity market, all of these indicators are apt to pay attention to as far as the CBN is concerned. But I do think that the big spotlight will remain on growth.
Now, we've seen inflation decline for the fifth consecutive month, and some say this is something that would also be on the front burner. Now, would you really say that we are 100% back to full business activities from what we used to have during the COVID-19 lockdowns and, restrictions and all of that? Would you say we are 100% back activated? Your whole economy is activated at this time?
Well, it's difficult to put a number to it when you think about it, but I would say that we're quite close. You recall that Nigeria is one of the economies that opened up, very quickly from the lockdown that took place last year. If you look at how the business environment has transitioned since then, we've had a lot of companies and a lot of organizations implementing a phased opening of business activities, right? And I feel like at this particular point in time, most businesses have sort of returned back to full activities. There are some, however, that are concerned about the resurgence of new variants of the COVID-19 virus, and that has sort of made them return back to the previous model that they are operating. So I would say that while we've had most businesses coming back to full activities, there are still some that are quite cautious of the new variants that are in town, and because of that are still operating some sort of partial opening or some sort of phased opening currently.
Now, the crude oil market is also something that everyone will look up to at this time. There's been a little bit of stability, but looking at our own contribution, we've been doing around 1.4. I think it's even lesser at the moment, talking about our daily production. Now, what do you think? Because if we have stability in the crude oil market, we can be sure of a little bit of growth, because that's where money actually comes from. Now, what do you think of that market, particularly volatility in that space?
If you look at the trend of crude oil price, I would say in the last 2-3 months, it's been stable. It's ranged between $68–72 per barrel. And I think that it's a fair one for Nigeria when you look at the downside in crude oil prices that we had in 2020. You recall that crude oil prices crashed way below, $30, $20 per barrel. And then when you compare that in a comparative sense to what we currently have right now, I think it's a huge improvement. However, the concerns for Nigeria will be around oil production, not really oil price. While it is true that oil price is sort of outperforming in relative terms, when you compare it to last year, Nigeria is not producing enough, to sort of rein in on those gains that we're currently seeing. And that is because of the fact that, number one, there is a gradual return to the pre-pandemic level of production globally. OPEC is gradually, moving oil production to the levels where they used to be before the pandemic happened. But we're not there yet, but there is a gradual progression to that level. And so there is still, some sort of cutback as far as, Nigeria can produce. Then there are also structural challenges around, how much Nigeria can produce. In terms of whether we have, our refineries working, what's the security of the pipelines we currently have, and then there are still concerns about the level of demand and how it fluctuates, and how that sort of affects how much Nigeria can produce. There's also the issue of Nigeria not having enough, capacity to store, crude oil that is currently available. So when you think about all these structural challenges, it spells, it spells the fact that you're not producing enough. And that is exactly, the main issue we're having with the oil space, not really, the oil price currently.
Now let's look at the big one. Yes, I know one way or the other where we discuss would always flip around issues on FX because it's key. And finally, at the last meeting, the central bank made that move. Yes, stopping sale of Forex to BDC operators. Finally, they said they are not going to sell to them anymore. Now, I have two questions for you. Do you think the commercial banks can really handle this situation? Well, that's one. And on the other side, what do you think of this free fall? The Naira, especially at the parallel markets. How long are we going to continue like this?
It's a very interesting question, Tolope. Let me start with the first one. I would say it's for a fact that the main issue we have in terms of managing FX is supply. Once we're able to manage supply, would most likely be able to solve, the whole hiccups around our FX system. Can the commercial banks handle the quantum of demands they currently have? I would say currently no, and that is simply because the CBN is not supplying enough for them to accommodate, the volume of demand that they currently have. If the CBN can supply to them, a bit of antecedents, right? You recall that immediately after the MPC decision in July, the CBN came out to supply about $200 million to banks to sort of accommodate demand. And that sort of quelled the panic buying we saw in the parallel markets and helped banks to accommodate demand. But since then, we've not seen that sizable amount of intervention in the market. We've seen it trickles here and there from the CBN to players in the official space, which includes bank, right? And so if the CBN is able to push up supply to that same levels that we saw, 200 million, and they're able to supply that, for instance, let's say every fortnight, I think that will go a long way in helping commercial banks to absorb the demand, that they are currently seeing. However, when you look at what we currently have right now, because of the fact that banks cannot contain all the demands, you have a lot of this demand going back to the parallel market, and that is what is causing, the free fall of the Naira that we're currently seeing. To be very honest, I feel that we're most likely going to have this trend persist for a while if the CBN, does not send a very strong message to the market at today's MPC meeting. In my opinion, I think that most investors and most market participants will most likely want to see what exactly is going to be the CBN stance on exchange rates. Even, they would most likely prioritize that, above what the interest rate decision is going to be. And so I feel that it is very important for the CBN to send a very strong signal to the market, either in terms of, assuring the market of liquidity, to banks to be able to cater for the demand, or they sort of come up with some timeline as to how they want to reappraise the decisions they made regarding discontinuity of sale to discontinuity of sale of FX to BDCs. So the message they send to the market will go a long way in determining how the free fall, at the pace and the acceleration of the free fall, from now going forward.
Argue that the effect of the banning of FX for some products which the central bank believes can be produced in country is also the reason for this. Maybe that should be reviewed. Some will say those importing those kind of products will definitely source for forex elsewhere. Or are you also of the school of the or do you also agree with that sentiment that CBN should actually improve supply, like liquidity, more liquidity into the space? Which do you think will help, at least maybe in short term?
Well, I think it's more of improving liquidity. So let me critique the first option of the fact that imported items that are currently on the restriction list of the CBN, is what is contributing to the free fall of the Naira. I would say that while it is a good initiative to put out a policy to improve domestic production via restricting FX, I do think that it's important to at least have some level of self-sufficiency in this production, even before you go ahead to ban these items. Howbeit, I believe the CBN, have very good justification for putting those items on the restriction list. However, I don't think that's the main issue. I still believe that the main issue, around the exchange rate is on liquidity, and which is the fact that the CBN has to supply multiple banks. I'll say that if as a central bank you operate a fixed exchange rate system or a managed float exchange rate system, I think that's the right word. It is important that you supply. If you operate a managed float, system and you're not managing it, then it's not going to work, right? So that's where the whole idea of the CBN coming out to sell more, falls into place. So I think it's more of a liquidity issue, not the items that have been restricted.
Now, when we have interventions, both from the fiscal and the monetary side, normally what Nigerians want to see is the effect of all of these interventions. As of the last check, I think trillions of naira are being rolled out for interventions in the agri space, in the pharmaceutical space, the creative sector, for MSMEs. We can go on and on. We've been seeing all of these interventions. In your view, you analyze all of these issues and you see what's been playing out. What do you think, or what's the effect of all of this? It's a country of more than 200 million people. Would you say that we're feeling the impact of all of this in any way?
Largely, I would say yes. So, number one, it is important to have these interventions. We're just coming out of a recession. We've had 2 quarters of positive economic growth, and I think that these growths, have come on the back of these interventions, most of it coming from the CBN. It's very imperative to have these interventions, honestly speaking, because if we don't have them, it means that while the Nigerian economy can recover, it would take, it would have taken, much longer than what we're currently seeing. Is the economy feeling it? Oh yes, I think yes, the economy is feeling it. It might not be significant, as it were, but I think that the trickles that are coming from these interventions, are still laudable, right? For instance, if you look at the agri space, you notice that the growth we've seen in the agricultural sector in the last 2 quarters has ranged between 2-3%. And I think that while it may appear, rather small, it is still, something that has supported the economy in terms of food production, and has sort of kept, and has sort of helped to manage food inflation from going off the roof. If you look at the creative sector, media and entertainment, and all of that, it was important to have these interventions, because some of the sectors that were badly affected by the COVID pandemic was hospitality and then the media and entertainment sector. Both sectors were severely affected by COVID, and so if we did not have those interventions coming in, it's most likely that those sectors will still be crippled by now. But what we've seen is these sectors are beginning to recover gradually. So I would say that the interventions have sort of impacted the economy, even though it's at a very, very small, very small size, if you want to put a size to it. But I do think it has impacted the economy positively.
All right, now let's wrap up this segment of the show by in direct terms. So do you think they will retain? Do you think there will be any shift? What do you think would happen today?
Yeah, if you look at how the CBN makes decision on MPR, the monetary policy rate, it's very clear that they're going to keep rates fixed. Number one, you look at growth. The economy grew by 5.01% in the second quarter of the year. Yes, that might warrant, that could warrant the CBN saying, well, we've had enough growth, let's hike rates. But because they want to consolidate on more growth, it's most likely that they're going to keep rates, low. They're going to keep rates flat to, sort of push out more growth from a monetary policy accommodation perspective. If you look at inflation has been slowing down at 17.01 for August. In that kind of a scenario, we have disinflation. The best thing would be to keep rates flat if you're not going to slash rates further. If you look at the monetary supply development, you look at credit to the private sector, it's been improving. And that is because of the fact that the CBN has sort of engendered a low interest rate environment. For that reason as well, I think the CBN will want to keep rates flat to continue to see more of those growths, more of the credits going to the real sector, for development purposes. If you look at the equity space, it's been improving. You check the ASI and the market capitalization. You check the figures for those two indicators. You notice that yes, they've also been improving, and I believe that the CBN would want to see that trajectory maintained, in the near term. Where we would have an issue would be exchange rates, right? But again, like I said, I don't think the CBN would want to manipulate anything around the exchange rate using the interest rate. They'll most likely want to send a message to the markets. And I believe that this would most likely come, that the announcement of the CBN on exchange rates will most likely come after they must have announced their stance on interest rates. So overall, I think we'll keep rates flat.
It's a good way to leave it. I've been speaking to Mr. Michael Ogunremi as a macroeconomist and fixed income analyst at Chapel Hill, Denham. Thank you very much for spending your afternoon with us. We really appreciate this.
Thank you very much, sir.